Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Central banks say they're watching inflation, so mine is in the cereal aisle. If you think compliance is expensive, try non-compliance. It comes with press coverage. The economy is recovering the way my fitness goals are, technically, but not visibly. In markets, panic spreads faster than optimism, probably because optimism requires data. Economic models are impressive until you realize they assume humans behave rationally.
I quite love this chart. It's a quiet but a very powerful story. India's college classrooms now have as many women as men. Over the past decade, female enrollment has surged past male levels, with both now touching around 30% gross enrollment. Add vocational and technical institutes like ITIs, and the real figure is around 35% and rising. The target, 50% by 2035. Here's a fun accounting trick. India's hottest startups just discovered profitability, but only after a little help from the other income fairy. Take Lenskart. Its FY25 profit got a boost from a one-time gain linked to an earlier acquisition. Urban Company and Pine Labs, tax credits. Boat and Physicswala, one-offs. Zomato, earning made from interest income than from your food orders. Even Paytm, still deep in the red, shaved off 1,500 crores of losses through adjustments. There are three kinds of lies. Lies, damn lies, and adjusted earnings. Apologies to Mark Twain. The global e-commerce race in 2025 looks more like a victory lap for one company, Amazon. With 2.7 billion monthly visits, it's not just leading the pack, it is the pack. Temu, the fast-rising Chinese disruptor, is in second place with 1.6 billion visits, proving that low prices and endless discounts are still the world's favorite marketing strategy. Then comes AliExpress, eBay and Ozon, holding their ground but far behind. India's Amazon.in also sneaks into the top 10. Everyone loves an IPO until the stock actually lists. According to Bernstein, half of all IPOs since early 2024 are already losing money. Yes, 50%. The market's euphoria is real, but so are the bruises. Sure, a few stars shine, but most new listings are trading below issue prices once the hype fades. It's a familiar cycle: FOMO fuel frenzy, glossy valuations, and quiet regret. The average return across all IPOs, just 4%. It looks like investors are quietly swapping adrenaline for aspirin. After a long run of chasing high returns, money is drifting towards hybrid funds, a middle ground between equity excitement and bond market calm. The data says it all. Smart beta flows, once the darling of the market, have sunk to their lowest share in 2 years. Meanwhile, hybrid fund flows are ticking up, a classic move when investors start valuing stability over swagger. There are old investors and bold investors, but there are no old and bold investors. Howard Marks. A year ago, everyone said the worst was behind us. Turns out, we are still there. Despite 5 years of a roaring bull run and a year of flat returns, fundamentals haven't really improved. Valuations remain high, earnings growth is soft, and sales growth practically on life support. PE and price to book look in line, but only because prices haven't moved much, while profits have struggled to catch up. It's less a new bull cycle, more a case of markets floating on hope and liquidity. Here's something that might not surprise you. India's industrial muscle is firmly anchored in the south and the west. Tamil Nadu leads with nearly 40,000 factories, followed by Gujarat at 31,000 and Maharashtra close behind with 26,000. Together, these three states alone host over a third of India's factories. Meanwhile, Uttar Pradesh, Andhra Pradesh and Karnataka round out the next tier. What's interesting, states with strong logistics, ports and power availability dominate. You cannot make in India if you cannot move in India. The age of AI is here and is already rewriting the job market playbook. In just 2 years, over 4 million people have been laid off globally, many from hardware, retail and sales roles. Yet while layoffs are cooling, AI hiring is quietly surging, especially in India quite surprisingly, which leads the world in new AI job ratios. Here's a twist. Those who adapt are earning big. The AI skills premium is massive. Salaries are up to 120% higher in energy, transport, and manufacturing for workers who can wield AI tools. So AI won't take your job. Someone using AI will.